Morning. ADP. Big news today, big news. All right, good enough, huh? Good enough. Good morning, everybody. Welcome to Forex.Today, the YouTube community of more than 21,500 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So we got ADP, another dumb prediction, and weekly claims. And after jolts and before NFP tomorrow, we are super sensitive to what these numbers could be. So please answer the poll. What do you think they're going to come out as? Are they both going to be red hot? That's claims and ADP. Or are they going to come out moderate as expected? Is it going to be mixed? One is hot and one is not, vice versa? Or are they both going to come out stone cold? Yeah. Let's know your thoughts, because we're only a few minutes, like 10 minutes away from ADP. Yeah, so currently yields down, commodities down, dollar and stocks flat, Bitcoin stuck at 111. Everybody's waiting for the grass to grow, waiting for the snow to snow. Very cool. Let's get an update on the headlines. Crypto today. Bitcoin tests breakout zone as Ethereum. XRP consolidate on cooling futures.
Pound sterling drops against US dollar ahead of US employment. PMI data.
FTSE modestly higher. Airline stocks drift lower.
Pound on yen edges higher. to near 199.30 as UK gilts rebound faster than Japan's bonds.
Slovenia trade surplus shrinks in July.
Gold consolidates below record highs as traders eye US labour market data. South Africa's sugar farmers face double whammy from Trump tariffs, cheap imports.
Australian dollar US dollar extends losses, approaching 0.6500 with US data on tap. Valitax shines as diamond sponsor at Money Expo Mumbai 2025, winning key award. CAC 40 down slightly. Sanofi tanks, nearly 10%.
Yeah. Cool. So ADP last time was 104. People are expecting 65. That's pretty low. That's very low. So even, as expected is pretty bad. Can we get lower than that? Jiminy Cricket, I don't know. But even if it comes out 65, holy smokes. The idea here is a slow ADP or a low ADP would allow the Fed to cut in September. Well, hell's bells. Even if it came out 70K. That's still bad. I wonder if that changes anything. Well, we'll have to take a look at that, but lower than 65. Oh. And then claims are 15 minutes after that. Okay. Anything above 230 will allow the Fed to cut. Then later today, we got our PMIs coming out for markets. America's turn. Are you talking about jolts? That's not job cuts. That's lack of advertising. So you bring that up. I think that's what you're talking about. So we go to fundamentals, we go to employment, we go to jolts. Yeah. So we were expecting 238 and we got 218. And it's a 3-month down. Oh, Challenger, Christmas and Gray. Yeah, okay. Yeah, that's not cuts. That's layoffs. That's why I misunderstood. Okay, so this is jolts. There are less jobs available in the United States. Less and less and less and less. So if we go back to the beginning of the year, there was over 8 million. Now there's only about 7 million. Whoa, 1 million jobs is a lot of jobs for many people. Challenger, Christmas, and Gray layoff report. Go. Site. Am I zoomed in? No. Jiminy Cricket, that's their website? Wow. Anyways. I can never find this. They put all this money into their website. Anyways, I don't want to miss the news. Crypto today. Bitcoin tests breakout. Shh. Me. 4 minutes. All right. This is June. We should be looking at July. Oh, that one. Still, it should be here. Like it's you're saying this one, the Challenger report. Well, the title throws things off, but anyways, 86,000 cuts. Okay, so I'm sure everyone here has read the model that I use for calculating projections for non-farm payrolls. I published it, I don't know, 10 years ago, maybe longer, at FX Street. There's a big, long article on it. And so often what you can do is you go to your Friday NFP, and they're expecting 75, which sounds incredibly low to me. Then you subtract this 67, I think it was, right? So we basically get a 0 NFP. Ooh, wouldn't that be something? Huh? There's more to it than that. All right, thank you for the votes. Let's see what you guys say. As expected, which to me is low. As expected might be good enough. So we'll check the Fed funds futures market as well. And later today we can check, well, I guess, well, yeah, you could check the Treasury market and do the calculations based on public data versus private negotiations of contracts. Slovenia trade surplus shrunk in July. Tisk, 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 Slovenia. All right, here we go. 1 minute. You guys excited? I'm super jazzed. I'm pumped. 30 seconds, y'all. Don't forget, we have claims in 15 minutes after this. ADP, consensus 65, which is already low. So I'm thinking even consensus or lower allows the Fed to cut. Because that's a bad number on an absolute term. So we're looking for absolute and relative change. Okay, let me zoom in here.
Investing Live European Markets Wrap. A steadier mood awaiting more U.S. data.
54! 54! Oh my God. All right, stock market up, yield down. Oh my gosh. Oh my gosh. Ooh la la. Stock market should like that, I stink. Yeah. All right. Yeah. Holy smokes, huh? Yeah. Okay. The other thing probably is dollar weakness. Let's take a look. We'll do short-term indices. Huh. I don't know. What does that look? Does that look like dollar weakness? I don't know. I can't read that. Sure. I'm not sure how to. A little more exaggerated this way, huh? Yeah. All right. So that's good. That's risk on. That's treasury yields down. Yes, on health. That's precisely correct. But everything can change on health based on the next piece of data, which is claims, which is here in 12 minutes. So in this one, if you want the dollar to continue to weaken and the stock market to rally and yields to fall, if we want kind of a perfect storm, we want a high number here. So anything above 230 would be continuation. Less than 230 would be mixed bag and choppiness and pain and destruction. All those things bad. Pain, destruction, socialism. Oh, did I read it wrong? Is it not 50K but negative 50K? Did I read it wrong? That would be amazing. Is it really that bad? No. No, that's plus. It's not negative. It's not a deficit. 11,000 less than. So anyways, yeah, yeah. Yeah, I misunderstood you. So that's all. Yeah. So anywho, holy smokes, eh? So that could be good. I would imagine for a lot of different things. One of them might be commodities. So S&P 500 up, gold up if you want gold to be up. Now our next target for gold is right there, and we had talked about this area in here in great detail. And so, where's the next leg up if it continues up? This is what our conversation was on Tuesday, I believe. And so, anyway, so I think on Tuesday we were talking about getting to here. Then we've had a pullback. And so the next one would be here based on resistance, but based on pivot point theory, which is implied volatility, not technical analysis. So if we're going to use a variation of implied volatility, it would look like this. This would be Okay. Now, if things turn out differently, okay, then you're going to get something like this, right? Okay. How do you explain this? Well, the basic thing. Let's go to the basics. What do we know? Talk. Okay. Gold opened out of position.
Euro Swiss franc extends gains as Swiss CPI stays soft. Eurozone retail sales disappoint. Breaking. U.S. private sector employment rises 54,000 in August versus 65,000 expected. United States ADP employment change below expectations, 65K in August. Actual 54K. August U.S. ADP employment plus 54K versus plus 65K expected.
U.S. ISM Services PMI set to remain strong in August.
Wall Street aims to open broadly up.
All right. So, based out of just standard operating procedure, the way that gold opened the month of September, it's out of position. What you're supposed to do is use the 4-hour 21 to ride it up. And an out of position trade is expected to hit this target and hit it early in the month. Okay, that's just implied volatility, all that kind of stuff. Like there's nothing more to that. That's just straight out of the training course. It has nothing to do with market conditions and changes at the Fed and all that kind of stuff. But if we feel like we have a regime change at the Fed, dollar's likely to weaken. That's just how it is. So you have to take what normally is, and that's normally our top, and then what potentially could be because of what's unique and different about this year versus every year. And that might just get us up into here based on implied volatility. So this is your standard operating procedure for a regular year. And this is what we might get based on an unusual. After that, there is no data. Like after that, it's not implied volatility. Okay. Interesting, huh? Now, if this all collapses on us, this is what I was trying to get at before. So let's say weekly claims are low. Let's say NFP is high. And this whole idea of the Fed cutting in September goes away. It can be that fickle. Yeah. Then you will get this result. And that would be the normal part of what you see here. That would be normal. And so, like, put it this way. If you're out of position in a bullish month, this is the projected high for the month. That's just it. If you don't know that, you don't know pivot points. You're just not reading your charts right. Easily fixed, though. Easily fixed. Cool. We can remedy that. And so right now, the current news suggests this is still possible. If the news changes, that is less likely. Yeah. So, one and done and on to the next one, huh? And so there's your ADP. And now we're 4 minutes away to find out, are we going to go to the extreme implied volatility? Or did we already hit the peak and it's time for capitulation? Good to know, right? Yeah, good to know. Hey, if you're logged into TRADARS, say hi in the chat. Well, we wait. We got 4 minutes yet. Hey, at at noon, we are doing our watch party, and we're going to learn how to manage the balance sheet of a commercial bank. Make sure you attend. The link is in the description below. Hello. Hola.
Breaking. U.S. private sector employment rises 54,000 in August versus 65,000 forecast.
2 minutes. And we're looking for a bigger number. 233 would be nice. Okay. It's not as choppy as some of these other things like ADP and NFP. So I wouldn't expect radically different. You see previous 229, so now we're thinking 230. Our analysis also shows 230, but it's just an average. This is the consensus. It's just an average. There's no consensus. It's just mathematical. Doesn't make it like accurate, but above average in today's scenario with a low ADP and above average claims, yeah, game on, risk on. Risk on, Bubba, a risk on. You're like, Wayne, how do you measure risk on? Oh. Good question. I don't know if I can answer that. Well, to get that, you're going to have to look at the stock market, the US dollar, the yen, gold, volatility, short-term yields, long-term yields, and the options trading market, which is over 1 million contracts. And then look at those, correlate them, and then measure them on 3 different time frames. Dude. So easy. We even track the seasonality of volatility. It's not even fair. Huh? You want an edge with your trading? Use TRADARS. You want every trade you ever make to be logical and intelligent? Use TRADARS. You want to know when to take your profits or when to let your winners run? You need TRADARS. Because we can quantify it. It's not guesswork. It's not gut feeling. It's not what you think or how you feel. It's what you can prove. So we're actually looking 13 weeks in advance right now. Week 45 matters to us. Week 32 matters to us. Here we go. Here we go. Give me a big number, 233, 233, 233, 233. Come on, give me a big number, big number, big number, no whammies. Big number, no whammies. Come on, government. Come on, government. 237, it's huge. It's so good. It's so bad, it's good. Whoa! Wow, that is great. That is great. That should lead to additional USD weakness. That should, right? That should yield, let's see. Wait, it's going up? Why is it going up? Let's get her on a fiber, huh? That wouldn't be right. $2.37. That's good. Because it's so bad. Okay, let's look at some of the dollar pairs. How about that? Exit light. Right now it's dollar strength. Oh my God, what's going on? Dollar strength? Why? I guess the idea is the economy is slowing. And the Fed has to cut to save us? Really? Yeah, well, it might just be a timing issue. Those that were betting against are getting out. So, well, I don't really want to corner the CAD here. What do I want to own? It's such a hard decision. Pound right on that pivot. Cray. Let's switch this up. Template. Let's be bullish because I want to be bullish based on my my bias. So I want to be, but we'll see.
United States unit labor costs came in at 1% below forecasts, 1.6% in 2Q.
United States continuing jobless claims registered at 1.94, below expectations. 1.96 made in August 26th.
US Q2 unit labor costs plus 1.0% versus plus 1.2% expected.
Canada International Merchandise Trade came in at 4.94B below forecasts, 4.75B in July.
Canada exports 6186B July versus 6174B.
So we'll see if we get anything out of this, huh? It's falling. So what? If you're a dollar bull, by all means, take the scalp short. Okay? If you are a bull, then you wait your turn. That's all. That's all it is, guys. It's a dance. Wait your turn. If you're right and you're a bull, this will turn bullish. So you wait. So that's it. That's it. Let's take a look. It might be too early, but let's at least eyeball it. Now we're at 97.6. Yesterday. Yeah. Yeah, it's even better. So that's, once again, this points to dollar weakness. If you look week over week, it points to dollar weakness. If you look month over month, it points to dollar weakness. So you go ahead and buy it if that's what you want to do. That's your call. But that doesn't make sense at the moment. Maybe it'll make sense later in the day. Well, I don't have to lose money now. I could always wait. Cool. It's just a beast that you will trade. The biggest mistake that you have made. Yeah, Euro's not a great one to be on. I'm kind of lacking love for anything. Do I want to own Aussie? Maybe. I'm working my way toward that as COT is changing. It's just a bias in your head. Okay, I don't really want to own CAD. Maybe Aussie later. Kiwi, maybe later. Pound, it's not the right price. If it's going to go to the next level, I don't need to buy it here. I mean, I could, but I don't have to. Yeah, Jolts was down. What? Yeah, so now we're going to hurry up and wait for NFP tomorrow. I still think you wait if you're a bull. You don't give up and walk away. No. You wait. If you're a bull, this says not now. See, there's only two things if you're a bull, right? Let's discuss. If you're a bull, you can only buy at support, right? All right. So based on implied volatility, that is support. Based on Fibonacci, that's support. Based on sort of a general eyeballing of looking left, this is all support. So you might buy it at this price, which I've already indicated.
Jobless claims rose to 237K last week. Jobless claims rise to highest level since June, adding to concern over labor market. Canada July trade balance, 4.94B versus 4.75B expected.
Okay, so you don't know the time to pull the trigger, but you do know the price. That's just basic technical analysis. What's your plan B if you're a bull? Bottom, central. Okay, great. So there's two prices in which you would consider buying. You just don't know if or when it'll happen. Perfectly fine. Greg says a little lower. That's fine. It doesn't have to, but that's just that's plan B because it's not the closest one. So all you should be doing right now, if you're a bull, is you're on one of your prices. So now you're deciding, is this the right time to go along? Now it's the only thing that matters now. Should you buy it now? Should you buy it now? What are you going to do? Are you going to wait for a moving average cross? Are you going to wait for an oscillator cross? Are you going to wait for the bigger moving averages, 2155? You're going to wait for a higher high, higher low? Are you going to wait for a double bottom, higher higher, higher low? All you're looking for is long. That's it. Now, if it blows through this, really, I bet you didn't get a trade if you're doing your analysis properly. If this makes a lower low through that, then you just let it fall. and wait for the same kind of confirmation down here at 116. That's all. Craig might be right. Great. Let it fall. It's only 30 pips. Who cares? So if it doesn't give you a bullish confirmation here, then you wait and see if it gives you a bullish confirmation there. That's all it is. That's it. You're like, well, Wayne, it's moving down now. I should be selling. Well, you do you. I didn't tell you what to do. But my opinion, if you can't predict it's going to happen, then you shouldn't be trading it. You're not a boss if you can't predict it. If you react to everything and you just trade reactionary, you're not a boss. Yeah. So if I'm wrong and it doesn't go up, it falls, watch me be wrong all day. And the idea is I never get myself into a losing trade. So you're at the right price now. You don't need to think about anything else except, is it the right time to go long? Now that's your decision. Is it going to be this candle is higher than that candle? Is it going to be this candle is higher than these candles? Is it going to be this rally is higher than that roll reversal? Is it going to be that you're up to moving averages and then use this as a roll reversal? You just wait. You're waiting for the sign. I saw the sign. And it opened up my eyes. I saw the sign. Okay. Hanging man. Okay. How would you feel about a 5A cross up? How would you feel about a 21.55 cross up? How would you feel about price going up to the 55, down to here again, and then up? How about up to the 55, down, then up to the 200, and then down to the 21, and then up? Yeah. This is all the things you should be doing right now. Right now! This would be a dumb place to sell, I can tell you that much. Dumb. You have no control. If you sell here, you have no control over your behavior. You're an emotional train wreck. Where would a bear sell? Oh, up in here. Well, I just discussed that even from a bullish point of view. Okay, I said up to the 55. Oops. Drawing tool, my handy dandy drawing tool. I said up to the 55 and then down, right? And then up to the 200 and then down. See, even a bull understands that. So a bull could buy here, a bull could buy here, a bull could buy here. Super simple. Where would a bear sell? Here. So if you sold down here, you just don't know how to trade. It's
initial jobless claims rose to 237K last week. Maha Commission report due next week. White House advisor says jobless claims rise to highest level since June, adding to concern over labor market.
United States unit labor costs came in at 1% below forecasts, 1.6% in 2Q.
Canada July trade balance, 4.94B versus 4.75B expected. United States continuing jobless claims registered at 1.94, below expectations, 1.96 made in August 26th.
US Q2 unit labor costs plus 1.0% versus plus 1.2% expected.
Canada International Merchandise Trade came in at 4.94B below forecasts, 4.75B in July.
Canada exports 6186B July versus 6174B. Breaking. U.S. private sector employment rises 54,000 in August versus 65,000 forecast.
So this is our squawk box, by the way. Everybody gets this at traders.com. So the idea is while you're trading, just like what we're doing, you're listening to the news as it comes in. Make America healthy again. Maha. So anyway, hey trader, have you heard the news? That's the whole idea. While you're trading, you're always updated with important data. Just the headlines. But you're constantly updated. Now, I enjoy listening to it while I'm on the beach. I enjoy listening to it while I'm on a walk. I enjoy listening to it while I trade. I think it's super cool. Yeah. Oh, look at that. You see? Wicked smart. All right. Thank you, traders. Thank you, Traders Way. Thank you, YouTube. Thank you, everybody. Remember, in a few hours, we're doing our watch party. No, don't bring your Rolex. No, we're going to watch a lecture together that I did. And it's a review on how to manage a commercial bank's balance sheet. And then on Tuesday, we're going to learn how to manage the central bank's balance sheet. So I'll see you at noon for that. Bring your lunch. Okay? Look at that. It fell. I couldn't care less. I'm a bull. Who's a boss? Are you a boss? Huh? Yeah. Peace on earth. May the pips be with you. May our profits be above average.